All right, welcome everyone. Welcome, welcome. We'll give everyone a moment to come in. Welcome to everyone joining us today. As I see everyone coming into the webinar. All right. Let's go ahead and get started. So good afternoon, everyone. Welcome. Thank you so much for joining us today. We have an incredible panel of business experts who are ready to share their knowledge on all aspects related to how to start a business. To start, if we could just go to the next slide, please, Amy. Thank you. To start, I wish to acknowledge the people of the Kulin Nations on whose land we are gathered today. I pay my respects to their elders, past and present. Next slide, please. Thanks, Amy. Hi, everyone. My name is Keri Clarke. I am the Startup Program Manager at the Monash Generator, which is the entrepreneurial hub at Monash University. The Generator provides support to founders seeking to validate, launch, and scale their startup or spin-out ideas, and is a resource that's available to Monash-affiliated founders or co-founders, so long as one of your co-founders is affiliated with Monash, meaning they are a current student or staff member or an alumni. These programs are available to you at no cost. Next slide, please, Amy. To kick off, these are the topics we will be covering today and what you can expect from the rest of this session. We could go to the next slide, please, Amy. For some quick housekeeping, we're going to be covering many very interesting topics that you will no doubt have questions about. Please drop your questions in the Q&A box when you have them so we may either answer them via text or answer them live. We will be recording this session and we'll send the recording out via email to everyone that has registered. The format of the session will be about 45 minutes of presentations from our 5 business experts, and then we'll have about 15 minutes to answer your questions live. So again, please make sure you drop your questions in the Q&A box. And if you see a question already asked that you have as well, please use the upvote function so we know which are the most interesting questions to answer live. Finally, you're welcome to connect with our panelists on LinkedIn if you'd like to continue or start a conversation with them that you found particularly interesting. All right, well, without further ado, let's get started. First, we welcome Alex Whiteside. Hello, Alex.
Thanks, Keri.
No problem.
Nice to join.
Thank you. So Alex is the co-founder of EasyCompanies. EasyCompanies is a business registration platform that helps over 5% of Australians start, manage, and run their businesses. Alex is the founder and CEO of EasyCompanies, who just 9 months out of university, he quit his full-time job and risked it all to start EasyCompanies. Prior to this, Alex had started 3 other businesses in web hosting, social media, and e-commerce. Welcome, Alex.
Thank you, Keri. Nice to be here.
Great. So today with Alex, we're going to be chatting about company formation. So Alex, what are the different business structures that are most common in Australia?
Yeah, to be honest, I mean, we predominantly focus in company registration, but when you're just starting out on the journey, there are a few different structures. So one of the most common to get started with is a sole trader ABN, which is really just formalizing your business, setting up an ABN, and then operating into that. You can always transition that to a company at any time. But if you are thinking, the business more seriously, or you want to just lay the groundwork from the beginning, then a company structure would be ideal. So that's essentially getting an ACN, which is Australian company number, and then you can get an ABN on top of that. So I would say those are the 2 most common structures. So on one hand, you've got individual sole trader ABN, so to say. On the other hand, you've got a company structure. Especially just for people starting out, those are the 2 structures you really need to think about. And that would be the main decision point.
Amazing. And I've heard a lot of things about setting up trusts and setting up your company with a trust. What are the disadvantages and advantage of using either a company or a trust?
Definitely. Like a trust is more of a tax and liability protection mechanism. Like you got to think of it that way. It is a more advanced structure. It's not something that predominantly most businesses start out with. It's something that you can add on later. There are obviously tax issues around that, but it is something that you can add on later. And it is something if you feel if you're restructuring or you really feel that this business is going to take off and you're willing to invest the capital to set up a trust and also to maintain the trust, then that's something that you can get started with. But essentially, what a trust is it's just sitting between you and the company. So usually, when you set up a company, you would be the shareholder as an individual. So my company, I own 100% of the shares, so to say, in a single founder business. There's no other shareholders. What a trust does is it becomes the shareholder, and therefore you have a bit more ability to move things around financially and from a tax perspective. And it also means that you have real no liability in relation to the trust, in relation to the company, because you're separated once more. It does help down the track with tax planning and things like that. So it can be beneficial, but you do have more overheads because you have to do another tax return. And there's obviously the setup costs and other maintenance and things like that. So usually we would see most people who are just starting out in business. The question is really, am I just going to be an ABN or am I going to be a company? If you're going to be a company, it's just a little bit more out of capital at the beginning. So you're looking at about $700 to set up a company. And then an ongoing maintenance is going to be around $1,200 or so a year. For a sole trader, it's literally just, you can basically set up an ABN for free. And then it's just adding on your business taxes to your personal tax return. So there's not really that much ongoing maintenance for a sole trader. The problem you have with a sole trader is, as a structure, if you start earning a lot of money, you've got to pay an individual tax rate on all that. And it gets quite complicated from a tax perspective. So that's why we see usually around that $75,000 mark is where businesses are making that decision to switch to be a company. That's $75,000 a year of income. I hope that makes sense.
Yeah, no, absolutely.
Yeah.
So it's less cost and time intensive in the beginning. And if you set up with an ABN, you can transfer to an ACN later when it's like a better option.
Essentially, yeah.
And then you can change to a trust later. Is that right?
You can add on a trust. The problem is when you add on a trust at a later stage. Let's say you start out a company today and you are the main shareholder, you don't have a trust involved. If you suddenly decide to set up a trust 2 years down the track and your business is worth $2 million, you've got to pay capital gains on that. Now, there are discounts available for small businesses and things like that, but you would have to be forking out that capital gains tax today. And these are things that can be discussed later from the accountants, Sid and Pop Business. But yeah, essentially you'd be paying tax on that today for that restructure. So there can be some complications there. It can help to have the structure right from the beginning. But in saying that, they are all things that can be added on later. You haven't locked yourself in. So it's really more about the trajectory of where you see the business. If this is just going to be a side hustle and you're really just dipping your toes in right now, an ABN could be ideal for having kind of zero business intent. I'm just going to test it out. Just want to get my domain name, issue a few invoices. If you see that you're going to put a lot of effort into the business this year and it's going to take off, or you want it to take off, then setting up a company might be the right structure. And if you're really going out to seek investment and really value this business, and you're going to put a lot of money into it, then putting a trust behind that might be a smart decision from a tax perspective.
And it sounds like it's sorry.
Yeah, sorry, go for it. Yeah.
It sounds like it's relatively flexible though. Like ideally you set it up the way you want it set up from the beginning, but if not, you can change your course. It might just cost you some extra time and money down the track, but you can always recorrect. That's what I'm hearing.
And the ATO have discounts for small businesses for restructuring and to be able to save on the capital gains. There are a few kind of loopholes in that way. It just depends on how much the business is worth when that restructure takes place. So yeah, it's not that you've locked yourself in, but people do take company structures more seriously. So if I'm a sole trader, I'm going out to seek a investment, they're not really going to even look at me like a VC or an investor. They're going to be like, where's your company? Where's your company structure? They want to see your company constitution. So if you are going out to raise and that's part of your plan, that's a definite, thing that you're going to need a company structure for sure. So
Brilliant.
sole trader is generally more of a hobby style structure, or just, most of your tradies and stuff like that run under sole trader. So yeah, it really depends on what type of business you're in and what you're going to be doing with the business.
Cool. And that's for all businesses in general. What about, is there any advantage to setting up separate entities if you have licenses or IP, or is there any other situation that would be suitable?
Definitely. So if you're getting into more complicated territory from a business perspective, you can, and these are decisions that you can make from the beginning. Once again, it's just capital outlay and maintenance. So you can set up a holding company just to own the brand, the IP, the trademark. And then you have a service company, which is actually the operating entity. So take EasyCompanies, for instance. We would have a service entity, which is the entity that people are transacting with and doing sales through. We're invoicing from that and putting expenses under that. But then we would have another entity which just owns the EasyCompanies brand, the EasyCompanies trademark, and the IP. If there was ever an issue with the services that we offer, and for a very unfortunate situation, we lost the whole business, we've just lost the service entity, because that's the contract that we have with the customer. It's on the service entity, right? So we could just set up a new service entity and begin trading again. We still have the brand, we still have the IP and things like that. That is setting up a separate company. And generally those kind of things, you're going to want to be seeing a lawyer, because you're going to need contracts to reassign the holding rights and whatnot to the holding company. So it is a more complicated structure, but these things do help because, getting it done from the start, because down the track, if you have to restructure, once again, it can be quite costly from a tax perspective, to do that in that moment, to restructure.
Yeah, that makes sense. Awesome.
And the reason I say the maintenance is just because each company you have to pay every year to ASIC. It's roughly around $300 to maintain a company. In addition to that, if the company's trading or earning any income, you have to lodge a tax return, or even just a nil tax return. So there's these kind of ongoing maintenance fees for every company that you set up. So if you're just beginning and it all seems too complicated, it's probably not the best idea to go and set up all these structures and then be paying thousands of dollars a year for ongoing maintenance with ASIC,
Yeah, awesome. Thanks, Alex.
That's
and what are the key steps in registering a business name and actually getting an ABN or an Australian business number?
Yeah, it's honestly one of the simplest things. I think, even when we went out to start EasyCompanies, before I started EasyCompanies, I wanted to go set up my own company. I'm like, this is going to be such a complicated process, right? Now we've built EasyCompanies in a way that literally people are surprised that it literally takes them 10 minutes. There's no real requirements. There's no real, as in like having to upload identity documents or anything. Literally just jump on a website, enter your name, your address, if you're a sole, director, who you are, and tick yes on an ABN and check out. And within about 10 minutes, you'll get the ACN and ABN delivered to your email inbox. A few extra questions along the way. I've simplified it a bit, but it is literally that straightforward. If you have people from overseas that are going to be involved in the business, it is a bit more complicated because you have to meet identity requirements. But I'm simplifying it, assuming that most people, they're just either a sole director or two directors jointly owning the company, and pretty straightforward process. So those numbers are issued pretty much instantly, and from that point you can set up your bank account and realistically begin trading.
Sounds super easy. Now I'll begin as an idea and execution.
Yeah, if only the rest of the business was as easy as the starting, that's the funny thing, that the first step in starting the business is literally the easiest step. Then operating and running the business is harder, of course, but it is the fun part.
Yeah. Well, on that note, Alex, we'll sign off with you. Thank you so much. And remember, if anyone has any questions for Alex, drop them in the Q&A box. I've just seen the first question come through. Alex will be online. And then if anyone wants to upvote the question for that to be answered live, then we can do that as well. So
Right.
we are thanks, Alex. We're going to welcome our next guest, Alex Solo. Hi, Alex.
Hey, hi, everyone.
Welcome. So Alex is the co-founder of Sprintlaw, and Sprintlaw are APAC's fastest growing legal firm and have provided legal assistance to over 50,000 startups and small businesses around Australia, the UK, and New Zealand. Alex is a commercial lawyer, a commercial law expert, and was named as one of Australia's most influential lawyers by Australasian Lawyer in 2022. Alex also previously founded Spider, an online digital agency, which he sold in 2015. Welcome, Alex.
Thanks.
Well, with Alex, we are going to explore legal requirements. So let's start off with, how might an early stage founder seek to understand the legal obligations for a business in Australia?
For sure. So I think there's kind of two ways to look at what legal things you might need to do as an early stage founder. There's, I guess, the obligations, so things that you have to do if you want to comply with the law in Australia. One of them, Alex Whiteside just talked about, if you're carrying on business in Australia, you need to make sure that you're registered either as a sole trader partnership company or you have some registration. Then there are other kinds of laws, some of them that apply to all businesses, some of them industry specific, around the way that you conduct your business. So for example, if you're providing health advice, you might need licenses or registrations, or, for our business, we provide legal services, so we need licenses and registrations. If you're operating a cafe, you might need licenses and registrations. So a lot of industry specific things. And then there's general laws, including the Australian consumer laws, which deal with how you generally must treat your customers and, refunds policies and those sorts of things. So there's a suite of laws that kind of you need to be generally aware of, because they'll apply to your business. And if you breach them, you'll be breaching the law of Australia. But I think relevantly for a lot of founders, in addition to the things that you must do, of which there's a few, there are many things that you should do but don't have to do. And these are things like, and we'll talk presumably a little bit more about this, Keri, but things like registering trademarks, getting contracts in place with your employees and your customers, thinking about data and privacy protection and these sorts of things. These are things that there's not necessarily laws that say you must do them, but they're really good for risk management. They're really good for building value in your business. And in some ways, you can think of them kind of like insurance, which I think Andrew will talk a little bit more about later, things to protect yourself against if things go wrong. But in another sense, you can actually look at some of these legal tasks as ways of building value in your business, ways of protecting your brand. And ultimately, in the future, if you intend to sell the business or raise investment, these are things you can point to that you own or sort of have protected against. So I think that's a good way of thinking about legal, both things you must do, but also things that you should do, I guess, when you can afford them. Yeah.
Yeah, that's really, really great advice. And especially that, investors or people that want to buy your business are going to look for those things that you should have been doing, but, knowing that you didn't have to. And it really, I think makes a really big difference.
Mm.
And how would you approach giving advice for implementing the right corporate governance and documentation? I think you alluded to it just now with the contracts. From a really basic level, like how is the best way to approach this?
So I think a big thing, particularly if you're an early stage founder, is, you're probably aware you need to get some legal documentation done. There's tons of websites out there that give you templates that you can download. And then you're probably aware that lawyers can draft stuff for you, and you probably don't have all that much money. So a big question is, what documents am I going to put together? Now, some lawyers will give you a long list that goes for 15 pages of everything you need to spend money on. And in a perfect world, if you had infinite money, yes, I would love you to spend money on all that stuff. But again, it comes down to, well, what are the most important documents that I can afford right now? And what things should I do myself, and what things should I pay for? So some really important documents, if you're doing business, with a co-founder, potentially investors, those kinds of documents that cover the ownership of the company, things like shareholders agreements, we call them, or investment agreements, those things are critical documents. They'll talk about, how the business evolves over time. What if someone wants to leave and someone wants to stay? What if, one shareholder wants to sell out, but other people want to stay in, all these sorts of things. Making sure that's drafted properly, ideally by a lawyer, I think is very important early on. And then contracts. So contracts with customers, employees, suppliers, anyone that you're kind of doing business with where there could be liability. Again, you want to make sure that you have something that governs, I'm doing this work for you, whether it's providing goods or services or a platform, you're going to pay me X dollars for it. And I have, a legal contract that secures that payment. If things go wrong, you can only come after me for X dollars. You can't come after my house and home and these sorts of things. So those documents are also very important. And again, like for your critical business documents, there'll be many contracts, many relationships you have. The important ones you want to get done right, I think, by lawyers. For things that may not be super important or high risk, those are areas where you might explore using some templates, things like basic website terms and conditions for simple websites, or maybe very straightforward privacy policies. But that gives you a bit of a flavor of the kinds of documents, those kind of setup documents, and then those customer and supplier and employment agreements, and then I guess those kind of more straightforward digital type contracts. Yeah.
Absolutely. And these types of things can take some time to set up in the beginning, and they're probably the less glamorous part of starting a business. But the time that you invest in setting these things up properly in the beginning is going to save you like an exponential amount of hours and heartache and headache and all kinds of hard conversations down the track. It's much easier to set it up and have them when everything is all good.
for sure. And I think, we see a lot of founders who, I guess unfortunately run into situations where, I think if you're starting a business by nature, you are willing to take a little bit of a risk, and lawyers are people that tell you about how you shouldn't take any kind of risk. And I think a lot of founders have that kind of risk-taking attitude, but what can happen is some of these really critical risks can actually mean the end of your business. And we've seen things like people forgetting to register trademarks, investing tons of money in their business only to be shut down by a brand that owned the trademark and their dream was over, or people that have gone into business partnerships without a shareholders agreement, a dispute happens, and that's the end of the business, where contracts or registrations could have prevented them. So it is, like I said, there's 15 pages. You don't have to do all 15 pages, but working out those important things up front can really make a big difference. Yeah.
Definitely. And you mentioned trademarks. That might be a great segue to talk a bit about like IP, so intellectual property protection for business ideas, trademarks and patents and things like that. Like what needs to be trademarked or patented, or what's like.
Yeah, what are the key things? So I think, look, it's if you are a business that will have a brand, which is 99% of businesses will have some kind of brand, and you want to make sure you own that brand. And when you set up your business, when you register it, you'll register a name. You might have a company name, and there's requirements around that. That's not the same as protecting your brand. A lot of people think it is. They're like, oh, I've registered my company, I own my name. You don't own your name, and you don't own your product names. What you need to do is register a trademark for your brand, and a trademark gives you an exclusive right, so kind of like a monopoly over whatever word or phrase or logo or sort of image design that you've registered in your industry and in a specific country. So to make that a bit more human, Sprintlaw, we have a trademark registered for the word Sprintlaw. We have a trademark registered for our little S-shaped logo, and it's registered in class 45, which is the legal class. So what that means is no one else in the legal industry in Australia can use the word Sprintlaw or anything even kind of similar to it, Sprint Legal, Sprint Lawyer. They can't use that in Australia in association with legal services. Now they could use it in another industry, so they could start like a restaurant called Sprintlaw that serves cold slaw or something. Terrible name, but they could do that. That would not be infringing necessarily our trademark. But it is important to register that. And when we set up our company, Sprintlaw Pty Ltd, we did not have those rights. And we've now want to expand internationally. We've registered trademarks in the US. We tried to register in Canada. We had someone else that had the trademark. A battle ensued. And had we registered very early on, we might have secured it. So you do want to be thinking about your brand from a very global perspective early on. And I think that's one of the most important forms of IP protection. Other things like your software code, your business plans, secret strategies that you have, These things don't require formal registrations. They're often protected through contracts. You want to make sure if you've got developers working on your platform, you sign a document with them that acknowledges you own everything they've created. And that's all you really need to do to sort of handle those things. But those things are also important forms of IP protection. But really at the early stages, I think number one is like get that brand secured. You're about to start building this thing. Don't be investing time, money in a thing that someone else might own or that you can't secure. Yeah.
That's such great advice. We have a little bit of time left. We got about 1 minute left. I don't think we can really cover employment law in one moment, but share with us like some hiring considerations and dealing with contractors and outsourcing. What's a good steer?
Yeah, I'll give you the 1 minute power pitch of what to think about with employment. Look, when you're taking on new staff, either they'll be employees, casual or full-time, or they'll be contractors, or they might be interns. I think the main thing lawyers would say is, number one, make sure you have a contract which sets out what their job is, how it can end if it needs to, probation periods and pay. If you don't have those things in writing, disputes can ensue. And then particularly in the area of employment law, if you're hiring somebody as an employee, there's a bunch of laws that apply, both in terms of the way that you have to onboard them, information you have to provide them, the way you have to handle their taxes, and in some cases, minimum wages to be aware of. So make sure you get some advice around that. Fair Work Australia has a lot of great resources. Lawyers can help as well. But I think that's a useful way of just being aware of the landscape of staffing. Yeah.
Awesome. Thank you so much, Alex. Really appreciate all of your insight. So again, everyone, you're welcome to drop your questions in the Q&A. I appreciate that I saw that Melissa has put for Alex and in parentheses, Sprintlaw. So there's a question waiting for you, Alex. But any other questions that come up, please feel free to share them. So we are going to throw you for a loop, and our next guest is not named Alex. His name is Michael Nuciforo, and he is the co-founder and CEO of Thriday. Welcome, Michael.
Thanks for having me, Keri, and you can call me Alex if you really want to.
Only when you're in trouble. So Thriday is an all-in-one financial management platform that uses AI to automate banking, accounting, and tax for small businesses. Before Michael's current role as the co-founder and CEO of Thriday, he was the co-founder and CEO of Parkhound, which was acquired at the end of 2017. And Michael started his career in banking and financial services, working at ANZ, Lloyd's Bank, and RBS. Whew. Thank you so much for making time to join us today, Michael.
Thank you. Looking forward to chatting to you all.
Great. So today, you are going to shine some light on banking and payments. So let's start with some basics. Is it important to separate personal and business finances?
Absolutely. So one of the things we often see is when people are starting out, they'll start using their personal bank accounts, and that can create a huge amount of headaches when it comes to tax time, because the simplest way to do your taxes is to go through your transactions and I guess reconcile which ones are income expenses and which ones are eligible for tax deductions. That can get super tricky if you've got personal transactions mixed in there. So we do encourage all people to set up separate accounts. For most businesses as well, as Alex Whiteside mentioned, most people in Monash, Generator and so on will be starting companies. And it's actually a legal requirement that when you're running a company that you do set up a company bank account, and a lot of people don't know that. And the reason for that is from an ATO or Australian Tax Office perspective, they actually want to see who has these accounts, and obviously they use that to monitor what people are doing and what's going on.
Awesome. And just to confirm that you need to separate them for if you're on an ABN or an ACN.
For an ABN, you can get away with using a single personal and business account. I don't recommend it. It's harder to track and maintain, but you can get away with it. But on a company, it is actually a legal requirement, so you have to do it. Yeah.
Got it. Perfect. Thanks for clarifying that. And speaking of opening business accounts, how do you choose the right business banking partner, and why is it important?
Oh, it's super important to get right because, as most people know, switching bank accounts is a bit of a challenge. And I think there's a saying in the industry that more people, you're more likely to get a divorce than move banks. So I think it's really important up front to decide what are your key requirements? And there's a few simple questions you can ask yourself. Do you need to have access to payments in terms of physical terminals so that you can accept card payments in a store? Or do you need to accept payments online? Because that can help you decide if you want to partner with one of the specific banks, and also who a potential payment partner might be. So there's solutions like Stripe, Adyen that are in the market for accepting online payments. And then for sort of terminals, most people are looking at solutions like Tyro. And there's also a new sort of entrant in the market called Zella, which is based in Melbourne, which is doing really well too. I think the other thing is you also need to determine if you're likely to have staff just onshore or offshore. If you've got staff onshore, you will want to be looking for a bank that provides good prices on international remittance. Or again, you could be looking for a separate solution in the market, like a Wise or an Air Wallet, which allows you to move money offshore quite easily. I think the one thing that often people overlook is card transaction fees, which can add up, especially if you've got a lot of software as a service type products set up with US companies, which many people do. So if you've got like your Zendesk, Webflow, those types of solutions, you want to make sure that the bank that you choose isn't charging exorbitant fees for international transactions every time those are processed. I've seen some startups spending, $300-400 a month on what's apparently a free bank account on those types of fees. So just keep an eye out for that. The final thing I'd call out is just in relation to your accounting and tax setup. Most banks do offer feeds, or what they call bank feeds, into solutions like Xero or MYOB. But there's also new solutions like Thriday, which sort of does it all for you automatically, where you've got your banking, accounting, and tax in one place. So, that can be an easy win for early stage businesses.
Yeah, no, that's so good to know. So just confirming, so opening a business account and choosing the right banking partner, that sits aside from merchant services and payment options for customers, or does the banking partner actually determine what options you have?
No, you can. Most banks offer fairly good terminal and online payment solutions. But in terms of what gets a lot of airtime are the solutions like Stripe and Tyro. I would recommend people look at having everything in one place. It just makes your life easier. So for example, if you were to say go with a NAB, they do have pretty much everything that you need from a payments perspective, as well as the bank accounts. And if required, they have obviously credit and loan options for you. Now, most early stage businesses won't be eligible for credit cards or things like that, but it's something to consider as your business matures and as your revenue grows. But to answer your question, Keri, one of the cool things is that you can pretty much pick and choose as many different solutions as you want. So if you just want to have a bank account with a Thriday or a NAB, you can. If you then want to get terminals from another solution, that's really straightforward. What happens is the money that you earn through that terminal just gets deposited into your nominated bank account anyway. So you can pick and choose off the shelf, but a lot of people find it also the costs start to add up and the complexity starts to grow as you've got all these different solutions in place. So looking to have everything sort of in one place makes a lot of sense for startups.
Absolutely. I mean, that's the last thing that founders are probably thinking about, but something really important to have in order. And you just mentioned that like early stage startups probably won't have access to credit options with the banks. But what about like corporate cards and frequent flyer points? Like, should companies get credit cards, or is this a slippery slope? And if they should, is there anything they should look out for?
Yeah, great question. There's some really good programs out there. So I think firstly, if you have received funding or you're venture backed, you will be able to get access to credit cards. And I think at that stage, it's probably worth looking at something like an Amex, where you can start to get good points. Now, it's important to note again that that doesn't come for free. You do get charged extra for transactions on your Amex. But if you do expect to travel a lot, that can be made up in terms of the points that you generate. So I encourage definitely founders to look at things like that. I think another thing to look at is in terms of corporate cards, there's a variety of solutions out there, again, that you can use. I know there's a local startup in Melbourne called Upsure, which provides sort of corporate expense cards. which again, if you're expecting your staff, so for example, if you have a sales team and they're taking out clients or they're going on trips, having that corporate card structure is really straightforward because you can give them a card, you can manage limits and things like that, and you can record all the expenses there and obviously claim tax deductions on those later in the year. But yeah, I think for most people at the early stage, key thing I would suggest is, going with a bank or a bank account, which gives you the flexibility to get access to credit in the future, and also gives you interest sort of savings accounts for business as well, especially with interest rates on the rise. If you've got $1 million in funds raised, that can actually generate some good revenue each month for you, if you've got that in a high interest savings account. So, definitely keep an eye on those things.
Brilliant. And it sounds like, to have everything in one place and to be able to manage it all centrally, it seems that there really wouldn't be a downside. Like, is there a downside to somewhere like NAB to have all of those services housed in one place? Charge a fee for that? Is it relatively expensive? Because convenience normally comes at a cost. So what does that look like?
Yeah, look, I think I'd say there's two things to call out there. Yeah, absolutely makes sense to have everything in one place, but it does limit you from potentially getting the best of breed solution specific to your needs. So whilst you might be able to send international payments from NAB, and they do support that, you might be able to get a slightly better rate with another provider. It all really comes down to, like in that example, volume. Like if you're just doing a handful of international payments per year, absolutely just use whoever your bank provider is. But if you're sending thousands and thousands of dollars each month and those costs are adding up, it does make sense to shop around and see if you can get a better discount with like an Air Wallets or a solution specifically for that need. So yeah, I think most people actually start with one. They might add one or two things over time as the need arises.
Awesome. Oh, well, that is all very, very useful information, Michael. And anyone that has further questions for Michael, please drop them in the Q&A. If you upvote them, we will answer them live, and Michael will be behind the scenes answering some questions for the rest of the webinar. Thanks, Michael. So next up, we will be chatting to Sidney Cachuela about accounting and tax. Sidney is a co-founder and director of Pop Business, a chartered accountant, and has worked as a financial advisor. He is keenly interested in strategies, frameworks, and systems that help businesses thrive in an ever-changing business landscape. And Pop Business is a modern and digitized accounting firm focused on helping owners build their dream businesses. Welcome, Sid.
Hey, Keri. Thanks for having me. Happy to be here.
Yeah, great. Our pleasure. All right. So let's kick off with some basics around accounting and tax. So is it important to maintain accurate financial records? And if so, why?
Great question, Keri. So maintaining accurate financial records, that's a key factor for running a successful business. Keeping them up to date and accurate as possible is very important. For instance, you never see a successful business like Canva, Amazon, Google without the right numbers, because they do understand the importance of using them to make the right financial and strategic business decisions. Accurate numbers are basically the backbone of any successful and thriving business. So key tips, I guess, to make sure that you have them at your behest is to have the right system. Now, for simple and new businesses, you can get away with having a simple Excel spreadsheet, just keeping track of different types of revenue and expenses. That is sufficient to help you or the accountant manage your tax obligations, but also to help you as, the owner, identify opportunities and risks that lie within your business. So otherwise, if you are a business owner that is looking to seek investment or grow into a larger entity, and potentially you're managing a few employees, having an accounting software would certainly be advisable.
Awesome. And I know we all get to the end of the year. Well, at least me, I should just speak for myself. Get to the end of the year and the accountant asks, so what deductions do you have? And you're like, oh goodness, let me go back through my receipts and my emails. So what deductions, like what tax deductions and eligible expenses can a business legally claim and therefore should be keeping track of them as the year goes on for easy access when it comes tax time?
Yep, brilliant question. It's a question that we probably get asked at least 1,000 times each year. So it does seem like that big mystery. You know, what can we claim during tax time, especially for the business? So there's three key factors, and I think you can use this as a rule of thumb, just to help make that decision for yourselves. The expense must be for your business as an allowable deduction, and it's not for private use. Private use being like personal groceries, maybe a personal Netflix account or things like
Oh,
that.
come on, Netflix. Well-being.
I know. We get the same response, the same reaction. So if the expense is a mix of business and private, you must allocate them and apportion it so that the business portion is claimed. So say you're using your mobile phone, and it's mostly 80% for work, but work is paying for it, then 80% is going to be claimable. And the third factor is that you need to have the records to prove it. And that's where an accounting system comes in handy. So in terms of typical expenses that you'd see, day-to-day operating expenses like rent, stationery, potentially mobile expenses as well. So subscriptions, exactly right. So as Michael was mentioning before, if you're using Stripe as your sort of gateway, then those expenses are definitely deductible. And other types of expenses deductions include purchases for products or services for your business. Say you're running a retail store and you've got to purchase shirts so that you can print on them and sell them further. That's going to be included, including also accounting services or legal services or setup costs. So similar to so expenses like that are certainly going to be deductible for the business. And then lastly, there's capital expenses that you might have, machinery or vehicles, which are necessary to deliver the services and products that your business offers. So that pretty much, in a nutshell, gives you information on what's deductible and what isn't. But the waters can get murky, but if there's ever clarification needed, definitely chat with your accountant.
Yeah, and it sounds like if you have the records, then at least you can have a really informed conversation, whether it's a yes or a no. So save all your receipts and keep great records. And I've heard the term many times, BAS statements. So business activity statements. What is included in a BAS or a business activity statement, and what's the required lodgement or lodgement frequency?
Yep. So business activity statements are an important lodgement that businesses must keep an eye on throughout the year. Generally, they're lodged to report the tax payable or receivable for GST, goods and services tax, and PAYG, pay as you go. So essentially what those two terms are, 10% is that goods and services tax that you tend to see on all the receipts that you see from people that you buy from. And then lastly, PAYG, which is the tax withheld when employers pay employees. So if you're wondering what that tax is, when you get your pay slips from your employer, you'll see that PAYG is taken out and the employer is paying that part of tax. So in terms of lodgement frequency, there are a few rules around that. So if you're voluntarily registered for GST and your turnover is less than $75,000, generally you can lodge this report or lodgements annually. So that's probably the most minimal type of reporting for GST that is around. However, if your GST is over, is less than 20 million, but over the 75 million, you will likely be a quarterly lodger, so every 3 months. And I'll explain this further down the track. And then lastly, monthly lodging, and that's for businesses with GST turnover of over $20 million. So in terms of, sorry?
That's our goal. We're heading there towards that status, towards the $20 million problems.
Exactly. That's what I tell all our clients. That's the goal. But then, of course, the administration costs to manage that, they're like, okay, maybe we slow down. But, you know, it's always a great ambition to have. So in terms of quarterly reporting, the year is broken down into quarters, obviously, January to March, April to June, July to September, October to December. And if you're lodging the BAS yourself, you have up to 28 days after the quarter to lodge that lodgement. So if you're talking about the June quarter, which is April, May, June, the lodgement needs to be done by 28 July. And if you decide to use a tax agent, they can get you an additional 1 month extension, which helps a lot for businesses, especially when they're trying to manage cash flow and other liabilities.
Definitely. Wow. And there are, like, to manage all of this and to do the right thing and to be compliant, like, there's so many different tools and software options out there at the moment. Can you demystify any of them? And, like, how might a founder go about choosing one of these incredible resources?
Yeah, I think, you know, depending on what industry you're in, there are tools that help, you know, your business operate, like CRMs, like customer relationship management tools, you know, meeting booking tools, transcribing tools, inventory management tools. But speaking as an accountant, you know, the right accounting software and tools can improve the efficiency of your time, and to make sure that you're spending time, you know, on income producing or, you know, service quality enhancing activities for your clients that, you know, your clients and your business will benefit from. So accounting is an expertise similar to like legal, financial, and marketing. So I think it's best to get the professional to help you with the accounting side, because there are a lot of nuances and intricacies of the service. But softwares that we really like, if you do try to manage, you know, the accounting side yourself, is certainly Xero. I'd say 90% of our client base is using Xero. And we'd recommend that for all types of businesses, but especially for those that are looking to build something bigger, and maybe a little more complex than can be managed in an Excel workbook. But as a small business or a startup, I'd also recommend considering Thriday. And Michael's the best person to speak to after this as well. But they've made it their mission to simplify all that for new businesses, early stage businesses, creating the bank account, saving your receipts, sending invoices, etc. So it really comes down for the owner understanding what their short-term and long-term goals are for the business. So yeah, definitely a lot of good tech out there to consider.
Amazing. Thank you so much, Sidney, for shining some light on all things that are accounting and tax.
My pleasure.
Sidney will be online. If you want to drop any questions in the Q&A, please feel free to do that. And we will welcome our final expert into the panel. Last but not least, it's my pleasure to welcome Andrew Birt. Andrew's the founder of Upsure, he's also founded many other companies over the last 15 years. Upsure is a founder-friendly insurance partner, assisting tech startups and scale-ups by getting them insured and helping them stay protected. Welcome, Andrew.
Thank you very much, Keri, and hi, everyone. Thanks for sticking around for the final session, too. It's good to see everyone here.
Yeah, woo. Well, naturally, we are going to chat with Andrew about business insurance. All right. So, Andrew, what types of business insurance are required for early stage startups?
It's a good question, Keri. Like, when you're very first getting started, insurance is one of those things that's so easy just to not think about, and that's kind of strangely how I got into the industry. I've been a tech founder most of my career, been building different companies, and was building a particular company called LifeX, which is a hardware company. We sold a physical product, and it was when we were moving into distribution and into retail, we would get these contracts in front of us that would say things like, you need $20 million liability cover, and we need to be a named party on this particular distribution agreement. So that was one of the first times I'd really encountered it as a growth stage company founder. And kind of the more we grew, the bigger we got, the more we learned about all the difficulties of insurance, and really started to think, why is this so complicated? Why doesn't anyone understand it? Why is it old school and PDFs? And really, we should make an easier on-ramp. So that was kind of the nexus of the business itself. But yeah, broadly speaking, when you're first getting started, I really liked Alex's point about the things you must have and the things you should have from a legal point of view. I think insurance is very similar. There's a couple of must-haves, particularly if you're raising capital. Probably some management liability is a big thing, because if you raise $3 or $4 million and you make misrepresentations to the investors, even if they're good intentioned and accidental, those investors then have a claim potentially against you as the director of that company. So management liability is super important. If you have a physical product, product liability is really important, because in our case, we had a light bulb that was Wi-Fi connected, and you plug that into the ceiling, and if it catches on fire and burns someone's house down, you're liable for those damages as a company. And then professional indemnity is a big one too. So if you're giving advice, or if your platform gives advice, or if you're even connecting two parties that may interact and transact on your platform, professional indemnity effectively covers a whole range of risks associated with that. There's so many others as well, and it often it is case by case depending on the company itself, but they're the main ones I would think about, and possibly cyber insurance too. When you've got other people's personally identifiable information, their emails, phone numbers. We've seen kind of big scale things like Medibank and those type of hacks. But even at the smaller end, if you accidentally leak people's data, that can be quite dangerous for an early stage company. So yeah, cyber is certainly something that's worth considering too.
Yeah, those are all such great points. So what's the best way for an early stage founder to start to unpack and understand the actual risks that are associated with their business, and what appropriate level of coverage they need to seek out?
Yeah, definitely. I think when I first got into it, I used to think that you could self-navigate to a certain extent. And you definitely can. You can just, go to Dr. Google and start kind of figuring it out and self-diagnosing. And there's nothing necessarily wrong with that in the outset. There's lots of good information out there. There's lots of, products, I would say, things like BizCover, where you can just jump on, answer a few questions, tick a few boxes, and get a quote for your product itself. But by and large, startups are doing something inherently complex, inherently interesting, and quite often very difficult to insure. And that's the opportunities and the niches that entrepreneurs exploit. So I would imagine a vast majority of people in this program are doing something new, doing something innovative, and it can be quite tricky to get that insured. So an insurance broker is by and far and away the easiest way to basically get this done. So you call up a broker, you speak to them, they send you PDF forms, you fill them out, and over the course of a number of weeks, they kind of come back and get you quotes. And a good broker too would explain the process and answer any questions, and give you options and kind of give you a level of comfort around what you're seeking to protect. And that's essentially what Upsure does. We've kind of taken the old school brokering process and streamlined a whole bunch of things. We have a bit of a joke rule that there are no PDFs in our business. Everything's form-based and quick and easy and fast turnarounds. And I think by and large too, it's understanding the startup sector, because quite often insurers are doing houses and boats and caravans and domestic products, and business insurance is a subsegment of what they do. So when you're describing a quantum-based computing software algorithm company, whatever it may be, it can be quite complex. You get these blank stares from old school insurance brokers. So we've just set ourselves up to be very friendly towards the industry, to really understand and approach it from the founder's point of view, and then by and large try and be helpful and useful throughout the company's life cycle. So we're all founders, we're all building things, and I think that's what's great about this community too. Like you could ask someone like Alex or Michael about banking or about law, but equally you could ask them millions of questions about entrepreneurship or about product. or about investing or capital raising. So I think we like to think of ourselves in a similar way that you can talk to us about non-insurancy things that are related to just growing a company and setting it up for success.
Yeah, and if you check out Andrew's LinkedIn profile, you see that he's founded many companies, so we can certainly have off insurance topic conversations. And so earlier you mentioned insurance that you need to have if you have investors. Are there different requirements for large corporate partners than investors, or is it along the similar vein of the insurance that they want you to have?
That's a really good question. When you're kind of out there capital raising with investors, management liability is more protecting you and the company in the event of misrepresentation. So even if you accidentally say something, you might say, oh, we're projecting to do 10 million revenue by year 4, which all startups do. We all do the hockey stick graph. And we've got that in our materials. And, you run a certain risk of that in the event that you don't, and there's a dispute and the investor tries to claim recourse against you. It is unlikely, but it is one of those things just worth considering. But contractually is quite a different. So often in the terms of a contract itself, depending on what it's doing, but the example might be you're a software company and you win a contract with the government, let's say Victorian government, and they want you to provide your services and your platform and expertise to the Victorian government. And part of those large procurement agreements with large corporates or government or any major partner often stipulates what they want to see from an insurance point of view baked into the contract. So they might say, okay, to go ahead with this contract, we want to see that you've got management liability. We want to see that you've got professional indemnity coverage of, say, a limit of $10 million, and workers' compensation and your other insurances nestled in. So what they're really trying to do is, and this is what's always tricky as a small company when selling into a big company, is prove that you have longevity and prove that there will be continuity, that you're not just going to pack up and run off and things. So big corporates are kind of looking for some reassurance that there's continuity, but also that you're managing things well, and that they do have a recourse in the event that your product or platform fails. As a startup, naturally, you won't be able to pay $10 million, let's call it, in a claim. But if the claim causes $10 million loss, then someone like the government or a big company knows that, well, okay, we can claim that limit. And that's part of what insurance is all about. We've had a whole range of clients that we've helped go through what we call a claim and make those claims and successfully have them paid out by the insurer. And to be honest, as a brokering company, we kind of love that, because that's insurance doing what it's supposed to do. You're not just putting money away and never getting it back. In a lot of instances, if something bad happens, it's good to know that you've got that off balance sheet protection that can come in and kind of minimize the potential damage that can happen in certain circumstances.
For sure. Planning for the unexpected. Brilliant, Andrew. That is all the time we have for today. Thank you so much for sharing all of your wisdom. If anyone wants to have a chat with Andrew, you can either drop questions in the Q&A for the next couple of minutes, or definitely connect with him on LinkedIn. And start or continue that conversation. So we have run right up until the end. So I'm not sure that we have time for live questions. However, the good news is that I've seen the Q&A being answered throughout the session. If we could welcome all of the panelists to turn their cameras on for just a moment so that we can thank them for their time today. Thank you so much. To all of you for making time to come and share all of your wisdom with our entrepreneurial community. Thank you.
Thank you.
Thanks,
Thank
Keri.
you.
Awesome. Amy, if you could put the slides back up just really quickly. We're not done yet. Just a couple of final things before you take off. All right. So if you enjoyed this webinar, please check out the other webinars that we have coming up. These are accessible to the entire entrepreneurial community. Now, noting that these next 3 events are in person. They're in person here at the Generator at Monash Clayton campus, here at the Generator. They will happen right here. So make sure that you register for these awesome masterclasses and join us. If we could just go to the next slide, please, Amy. Thank you. And another QR code, because you gotta love a QR code. Register to sign up to our newsletter. Our newsletter has all kinds of information on founder programs, community masterclasses, startup job opportunities, ecosystem news, and more opportunities to connect. We will be sending this recording out via email tomorrow, and we'll also share our incredible panelists' contact details. If you have any questions, they are very warm and welcoming, as you saw on the screen today. So please don't hesitate. And again, thank you so much for joining us today. Bye.